And there you have it. The markets are officially closed on this Wednesday, October 22nd. Welcome, investors and traders, and especially welcome to the brand new folks who are joining our channel for the very first time. We have a lot to talk about today. We've got earnings coming out in mere minutes. We'll talk about Netflix, Tesla, silver, gold, you name it. And we also have room for some analysis on any ticker symbols that you might want us to look at in the comments field. So comments and questions and also ticker symbols are very welcome. Before we get into the charts, let's bring on Nod from our Nod live feed. Nod, you've got constant news coming through your channels. And what do you have right now for our viewers that we could start the conversation off with? I know we got earnings coming out on, was it Tesla here in a few minutes?
Right.
We'll see. What else
AJ,
you got?
There's just so much going on. I mean, this half hour is just going to evaporate. But as always, I have to thank everyone who takes time out of their busy day and busy life to join us live and to join us on the replay. We are so happy to have you as a part of our family. Listen, AJ, the U.S. government is still closed, so we're not getting a lot of economic data. Some would say that's a nice thing, but what that does is that does opaque the Fed's view of what they can do with regards to an upcoming rate cut. I think they may be using this as a hedge for whatever they decide to do. So this is going to give them an out either way. So it's going to be really interesting. It's going to be really frustrating as well. But what's most important is the U.S. government recorded a $1.8 trillion budget deficit, which is one of the worst we've ever had. And October is set to be substantially worse. Also, AJ, as you said, we are in the thick of earnings season. If you have me looking to my side, I'm just looking to see when Tesla's earnings hit. So when they do hit, I will post them in because, that is a bellwether, not only for the automotive, but for the tech sector. And it's going to determine what the momentum is for tomorrow. But while we wait for that, AJ, listen, Tuesday was officially gold's worst day in 12 years with a near 6% drop in one day. Silver dropped 9%, which was the biggest drop in 4 years, and platinum dropped 9%. Now listen, AJ, we all know your longer term forecast for all of them, but can you go over some of these and let us know what opportunity it might create? And when you get to silver, can you tell us the difference between SLV and PSLV? Because I know there are a lot of opportunities you can discuss.
Well, there's a lot packed into those couple of questions there. But first, let me start off with gold. The futures ticker symbol is /GC. And the reason we are seeing this volatility is a couple of reasons, actually. But let me give you my thoughts. First and foremost, I've been more or less cautioning our members that the precious metals have been and still are in a very overbought condition technically, but I was looking for a correction or at least a significant pullback to get the sideline money off the sidelines and into the market in the precious metals, because a lot of the folks that are sitting there in cash are looking at this vertical chart and they're going, oh man, I don't want to buy in the high. So their fear keeps them out of it. That's part one. I think we're going to see some of that money moving off the sidelines and into the precious metals. And I would not at all be surprised by a significant bounce. We were kind of talking about that in the warm up before this broadcast. But the other part of this is, I think the institutions are leaning on the metals and miners right across the board in an effort to shake out the nervous money. You could even say the scared money, right? Those who are in a profitable trade, they're debating whether or not to take a profit and pull it out. And then all of a sudden you get a big down move and now they're getting spooked more or less and they're selling. Look at gold today. This is, again, the futures. Let me zoom in here. This candle right there is a very close to a hammer candle. It's one of the most bullish candles you're going to find. But what I find most surprising actually is that you have this candle on a bouncing off of the moving average. Now, you have to understand that this little hammer candle that I'm pointing out is this is futures here. But you see the volume down below is a lower volume day. If we were really going to see a continuation of the selling into the gold and silver markets, you would see, in my opinion here, based on what I've seen in the past, you would see an increase in the volume on the way down, and you're not seeing that. So it's really a combination. Now, SLV, many of you know, I've been reporting on this on X, and if you want to follow my trades on X, for the silver, put hashtag AJ SLV trades, and you'll find all the commentary and charts I put up there. If you look at SLV, again, very close to a hammer candle, nice and green. For the most part of the day today, gold and silver were down. And then towards the end of the day, let me show you what's happened here on a minute by minute chart. You could see we had this pop right around 2 o'clock, right up into the close. We see this movement to the upside. But remember what I said about volume. Volume is a leading indicator. So if you look at the end of the day, can you see that? Look at all those volume bars building up. And it was right around 3:30, a half hour before the close, that we saw the biggest spike in volume towards the end of the day. So that tells me that there are buyers coming in, and I wouldn't be surprised at all to see the precious metals and even the miners higher tomorrow. Now, I know this is a long answer to a couple of questions, but the difference between SLV and PSLV is that SLV is an open-ended fund. It's an open-ended ETF, and the custodian for this, it's a BlackRock product, but the custodian is JP Morgan. And if you have 50,000 shares of SLV, you could go to JP Morgan and say, I would like to redeem those shares in the physical metal, and they would give you the metal. That's what an open-end fund is. Now, because it's an open-ended fund, I don't know what the heck JP Morgan is doing with the silver, whether or not it's in their warehouse or their vaults or whatever it may be, or whether or not they're going to get caught with their hand in the cookie jar putting together lease agreements where they're leasing out the silver that they're holding. If that's the case, SLV is the much higher risk position to be holding. Now, on the other side of that coin, you got PSLV,
Right.
cheaper stock, and that's a closed-end fund, so you cannot redeem your shares for physical silver. So I think out of the two, PSLV is the safer way to go, and hence the reason as silver kept going higher, and I'm talking about the futures, as that was going higher, I've been gradually moving out of SLV and into PSLV to be a little bit safer in the position. And they're going to trade almost side by side in percentages, but look at PSLV, same thing. Beautiful, beautiful hammer candle. Look at the CCI just touched in the oversold condition. We haven't seen that in a long time, but that looks pretty good. I'm going to put a forecast out on this one. It might come up later in the rapid fire session, but I'm going to go right up to 1725 is my target. Now it's trading right around 16. So 1725 is going to be my target. And we'll report on that one possibly next week when we have Greg Montwell, who's going to be our next guest next Wednesday, another trader like me from the trading floor. And we'll have a lot to talk about, especially in the silver market. So there you go. The difference between SLV and PSLV. You got it, Nod. Love it.
I appreciate it. Well, listen, it wouldn't be a midweek report if we weren't rocked. So while you were talking, Tesla did come out with their earnings. So I'd appreciate if you could just pull up a chart. Now, I know it's very hard to chart on this while we're digesting. The call is at 4:30, but they miss on EPS. They beat on revenue. Their operating income came in line, and their margins were just a little bit higher. Free cash flow was higher. So the stock doesn't know what to do. A whole lot of nothing in the after hours. AJ, do you have anything to say, again, earnings aside, about Tesla?
Well, Tesla is a mega cap stock that's going to have a lot of the eyes from the institutions watching it. But this one is, when you miss on the earnings estimate, which is really surprising. I would have thought the other way around, because the analysts have been, for the most part, lowballing a lot of the estimates so that the companies have an easier go of it when beating the earnings estimate. And then they come in and they miss on earnings a lot of times. Look what happened with Netflix. We'll talk about that next. But see, now that the market is confused in the after hours, check this out. Right now, that's a red candle. It's probably going to drop a little bit here on the next minute. I wouldn't be surprised to see that drop, and it's going to oscillate back and forth. You got about a $2 range, maybe up to a $4 range here. But what I'm getting at here is that if the traders in the after hours, see, there it goes dropping. That's a live chart, by the way. As the after hours traders are trying to digest what they've just gotten in the news from earnings and revenue, the company's watching this as well. And they're already trying to construct the most colorful words they can. And we'll see what Elon Musk has to say on X. But they definitely don't want that price to be dropping too hard, especially with the way the economy is and the way the government is shut down. And so there we go. We just hit that target. I love when that happens on a live broadcast.
That's well done. We timed that just perfectly. Thank you. That'll be a marketing video.
And then we'll see if it bounces here. But my point is that the conference call that they're going to have after is what everyone's going to be glued to. And as they start talking about the future and earnings and sales and what Elon Musk has for the vision of putting Tesla cars on Mars and everything else, they're going to be trading against that. So keep your eye. If you're in, I'm not recommending anyone trade in the after hours, believe me, because you're going to get smacked by the pros who know how to manipulate price in the after hours, because it's a very thinly traded market and you could get hurt. So I don't want to set the stage and think this is going to be easy for you, but it will affect the prices tomorrow. Here, let's just take a quick glance at Netflix, because this happened with Netflix yesterday.
Sure.
Netflix, here's another mega cap stock. They're in the top 15 of the highest market cap stocks. They're like over $400 billion, close to a $500 billion market cap. And here, this stock was down quite a bit, down $124. And the after hours, look what happened in the after hours yesterday. I'll go back and look at what happened here. See, this is what happened with Netflix yesterday after the close. There's the close yesterday. They smacked it. It rallied. They popped it and then smacked it again and stayed down. So after the conference call on Tesla, you're going to see something very similar. If it continues to go down and then starts to flatten out, then you're almost guaranteed to see the market down as well tomorrow. It's kind of like Apple, Netflix, Nvidia. Those are the handful of stocks that are driving the overall market. So that's why this Tesla earnings and the results after are going to be so important tomorrow. The general markets are down, as we obviously saw. But Nod, we put out the forecast last Friday to the downside.
Right.
Let me just do this quickly. I'm sorry. I know you have a lot more to throw at me here.
You're good, man.
At all, but you got to understand that my downside target on DIA is still down there at 455.57. IWM came very close to hitting my target here. I think tomorrow or by Friday, that downside target's going to hit. For the brand new viewers, by the way, these diagonal lines represent my target prices. So on Friday, when I'm doing a report, I draw these diagonal lines on the chart, and then we get a very high percentage of hits in the ratio there. So I believe that's going to hit. So how does that help our viewers? Well, if you got a long position and you see that there's a high probability we're going to hit downside targets, you might want to do something to protect your position, hedge your position, collar your position, or maybe even get out and take some profits on some position. That's totally up to you. I can't tell you how to do that. But when you look at the Qs are already pivoting here. There we go. It's a hard pivot. My downside on the Qs is going to be 591.24. SPY, let me get into that. That downside target, I think, will hit over the next couple of weeks. That downside target is 653.89. And that brings me to the VIX, because look what happened to the VIX. At one point, this was solid green midday, and we closed with an inverted hammer. An inverted hammer is bullish 80% of the time. So I think the VIX is going to start to rock and roll to the upside. So again, the option traders who are long puts or have negative delta are celebrating that little itty bitty candle there with the long shadow on the VIX. Yeah, great market to be trading. Great.
No,
market.
It is great. And before I let you off the hook with going back to metals, we did have a request in the chat from someone to review copper and FCX. And FCX in particular, there's always that phrase, the catch du jour. It used to be, the bakery would say we're getting into AI and their stock would pop. Well, magically, FCX said 3 days ago that they are now getting into rare earth minerals. So can you do me a favor? Can you look at FCX or opine on copper in general? And then if you wouldn't mind dovetailing for a second into any rare earth opportunities, because we've been fortunate enough, AJ, to catch some of them on the upside. It's a bit of an overheated market right now, but is there anything else that's catching your eye outside of that?
Well, maybe we'll talk about this next week when I have Greg Montwell on. We traded gold and silver, and in the back on another trading floor, actually back behind the coat check room, they had the copper trading pit, and
Right.
there was huge volatility then. There's going to be huge volatility now. If you put in /HG, that's the ticker symbol for the December expiration in the futures markets. Now, when you look at this, it's looking more bullish on copper itself in the futures than FCX is looking bullish. So I go to the upside on copper, and I would put a target up here around 520 for copper itself. But when you go back to FCX, there's a lot more going on than meets the eye here, because not too long ago, you see this big gap down. They had a mining accident where unfortunately, they had fatalities, and they were talking about how they were going to be shutting down production. And then I was watching this, and I was telling our members, watch out, because we could go a little bit further down, but I think they're going to come right back and snap to fill that gap. Now, it didn't fill the gap all the way, and I still have an upside short-term target up here on FCX. But see, now it's interesting that they're talking about critical minerals, critical metals, and mining, because that's been the rage, right? We saw CRML, we saw MP, we saw four U's. We saw them all raging. Now they're all coming back, right? So I think that what they're trying to do is they're trying to get some more action into their own stock by appealing to those who've been trading the critical metals and mining companies. And everything's going to have support and resistance. Let me just throw out CRML, because this was a home run for our option trades. Look at this. It is now pulled back to just around $15 from the highs here. So CRML has dropped more than 50%. Get this, more than 50% from the highs just a mere week and a half ago. And now it looks like it would most likely bounce at that moving average. I'm not getting in it just yet until we see a pivot. But all of that is going to be affecting, you got Freeport-McMoRan, because the whole sector is not necessarily moving in lockstep, but they will have some sort of domino effect down the road. So if you're looking at what counts in copper, looking at the futures, and you don't have to trade the futures, but watch it when you're trading a mining company such as this. It's going to help you put the odds in your favor, and then also help you with managing risk, for sure.
So real quick. So AJ, as investors, we're the least diversified we've been in 140 years. So I'm pulling up a chart now just to illustrate that really quickly. I appreciate you covering, the VIX and everything. You kind of took some of my thunder, but if you look at this, we're super concentrated in the IT and communications, which again is the NVIDIAs and the companies of the like. I wanted to ask your opportunity. Do you see something in the stocks SOXX? Because I want to make sure everyone is aware that's an index that covers all of that. But again, with us being the least diversified in 140 years, that makes me itch. Is there something that you see on the upside or downside with the stocks?
Well, I'm not trading it, because we'll trade the individual stocks that make up this ETF, and even SMH. We'll look at that as well. But see, at first glance, you're looking at this chart and you're going, wow, what a beautiful uptrend that is. But then I tell people, take a step back, then look at the weekly chart. Look at the weekly 10-year, then take a step back again and look at the monthly chart going back to 2010. So you get, 15 years of history here. And you'll notice that when you look to the left, and I tell people this all the time, look to the left before you draw it to the right, right? Look at the history of the stock and the divergences from the moving averages that we're looking at. This is a 20-month moving average. Now, if I go here and I take a line, I'm just going to do a quick draw here. If I take a line, a vertical line, and draw it from that moving average to that high right there, and then I duplicate that line and move it on over to the right, look what we've got. We are approaching the all-time record divergence from that moving average. We are not far away from that. Now, while we are showing such a wide divergence from that moving average, look down below. You've got the oscillators already starting to hinge, not pivoting. A pivot would be going down at this point, but they're already ready to hinge. So that, for me as a trader, I'm looking at that and I'm going, there's absolutely no way I'm taking a long position on that. So from an option trader's perspective, what I'm going to do there is I'm going to start looking at possibly putting on some leap puts, maybe out of the money, And my trade here would be maybe going down all the way to 240, buying some of these and doing a spread. You're not going to buy the individual because the bid-ask spread's too wide. But I would look at semiconductor stocks and put on horizontal out-of-the-money spreads like what we're doing in our VIP room. Our VIPs are putting on out-of-the-money QQQ put spreads on to gear up for the chance that we could see a significant pullback and maybe even a crash. Again, right now, the momentum is still starting to wane from the upside. We're seeing the volume drop. But if you're not preparing for a downside move, then you're going to miss half the opportunity, at least half, in your trading experience here. So you got to look at it. You got to look at it all and take it in and then pick your stocks. Another way, last thing, Nod, you could go on Yahoo Finance, put in SOXX, and then open it up. It'll show you the top 10 holdings, the stocks that are in that top 10%, top 10 holdings. And then you could pick the best or the most volatile of the stocks in that ETF and just stick with that one instead of trading the ETF itself. So that's just a little tip there.
That was great. Thanks to you. So I want to pull up a chart just for reference. So I'm just saying a fact. I'm not giving you an opinion, but the S&P is at its highest PE or price earnings ratio in recorded history. And yet, if you check this out, AJ, we're seeing the companies the companies that are least profitable, they're outperforming the profitable companies. So people are disregarding companies that are making money and they're fleeing to companies that are losing money. I wanted to talk about risk management. I know you don't want to become, we can't tell people what to do, but we've covered the major indices. Is there a way that you would approach this market? But people like to be long, and that's fine. But can you go over just some of your favorite risk management strategies and maybe help people out?
Well, again, we're gonna talk more about this next week, so don't miss next week's show. It's gonna be very important because when I bring Greg Montwell on, we're gonna be talking about risk management and the way professionals manage risk. I'm going to give you some very valuable tips. Now, not you say we can't give people any advice here. In this instance, I can. I could tell people what to do. You ready for this? Here's what I would tell you to do. If you want to make money in the market, follow the money, right?
Sure.
Put your money in the direction of where the money is going. Now, I'm not going to say go buy the least profitable stocks on the board, but I'm telling you what we gave you last month and even last week was a look at this SPX chart. This is the index that's tracking the number of stocks in the S&P that are above the 50-day moving average. Look what we have here, folks. We talked about this, and it's making another move to drop below 50% here. What we have now is a bearish engulfing candle on this index. Let that soak in for a moment. That's a bearish engulfing candles like this, and bearish Harami candles are some of the most bearish candles you're going to find. And there's a bearish Harami even at the very top. So look what's happened here in almost every single instance where we had a bearish engulfing or bearish Harami. Down market, down market, down market, down market. What do you think we could see here? Now, that's in a downtrend as the stocks at one point earlier in July, the large majority, 80% of the S&P stocks were above that 50-day moving average. Now we're dropping. See that little number? That means 4.4891. That, right? That means 48.9% of the stocks are above the 50-period moving average, which means now that we've got about 51% of the stocks are now down below the moving average with that bearish engulfing candle staring you down. So when you see things like this, risk management is critical. The other thing I can tell you, and this is a guarantee, that and here's the guarantee, right? Write this one down, put it a tattoo on your right hand or whatever your left hand is, writing hand, whatever that is. And I'm going to tell you right now, if you allow the market to take money from you, guess what? It will.
Yeah.
If you allow the market to take money from you, it's going to take money from you. Don't let the market take money from you. So limit the risk, use stops, use collars, use options, and follow along at StickyTrades, because our membership, every single trade publication that we put out has a risk management component built into the video, every one. And next week, we're going to talk about power pivots in that trading room, and you definitely don't want to miss it. I actually have to take at least 30 seconds to plug Nod's service, his Nod Live service. If our producer could put the scan code somewhere on the screen, take the camera on your phone and scan that code, and they have a 15-day trial on that. That is the news releases that Nod is putting out through his news feed is beating Bloomberg's time to market. So in other words, Nod is not beating Bloomberg by seconds. He's beating them by minutes. And even last week, he beat by 30 minutes, a half of an hour. And so how valuable is that to a trader that's looking to possibly look at the news and see if there's anything coming out that could hurt you? It's the cheapest product we have on the board, and you're missing out if you don't at least even try it for 15 days for free. So I just had to throw that out there. Not.
I appreciate it. Let me get these blush cheeks out. Listen, you just talked about money. Let's talk about money. Morgan Stanley said that they expect the dollar to continue to devalue as rates come down, obviously, and as we rise, as our debt rises. That's going to create an opportunity for us, AJ. I think that feels like a pretty good assumption. What are some opportunities you see either in the dollar index or some of the ETFs we've traded like UDN with regards to what we believe is going to be a forecasted depreciation in the US dollar?
All right, I'm gonna look at the dollar, then we'll look at UDN, which is a way to trade a down dollar. So in other words, it's inversely related to the dollar. UDN is a cheap way to get short the dollar without putting yourself into too much risk. All right, so we all know what the Fed's trying to do, trying to lower rates, right? That's the big talk. Oh, let's lower rates. Let's pop the market up another 5% and keep doing that until we all get exhausted and tired of buying. But the point is, when interest rates go down, a dollar loses any, I guess you could say, appeal of the institutional currency traders. Right? Because if the interest rates on the dollar and holding the dollar is lower than what you can get on another currency in the basket of currencies that are available, they're going to move out of the dollar and buy some other currency. Now, I think the dollar is going to break out. Now, this is a monthly chart going back to 2000, right? This 25-year chart. This has been an upward sloping channel. If you know anything about channels, you'll know that once the channel line or trend line is broken, you then take the width of that channel and you extend it to the beyond the breakout point. So believe it or not, I think we're on the brink of breaking out over that, below that trend line, which could bring the dollar down to levels we haven't seen since 2011 to 2013. Now, a weak dollar, I paused for dramatic effect there.
You got it.
A weak dollar makes the precious metals more attractive,
right?
Because a weak dollar is inflationary. You buy less with that dollar now. So gold and silver are going to go right back up. If you think I'm shaking out of my long-term bias of silver going to $95 to $100, you're wrong. Absolutely wrong. I'm accumulating it down here, and if it drops even more, I'm going to buy more. Because I see what's happening with the dollar, I see what's happening with inflation, I see what's happening with the Fed. We have our eyes open. We have Nod Live news feed telling us what's going on. And with a minute and a half, Nod, we're going to take one question, and hopefully we won't go over on that one.
Perfect. I appreciate it. Listen, Marina's been very patient. She said, what's happening with PAS? You talked about silver. That wasn't one that you covered, please.
Well, PAS on the monthly is looking overbought. Remember, I said all the metals and miners are showing overbought, but the fundamentals are what's keeping me in. There's still a silver shortage. Just ask the U.S. Mint. They're not printing silver eagles because they don't have enough silver, believe it or not. And PAS is one that I would consider buying. I don't have it, but look at that green candle. Isn't that beautiful? And look down below. The CCI is bouncing and pivoting off of the lowest level in the most oversold condition it's had all year. And so I like PAS there. It's got a good support level right around that area, right around 34, 35. So that was one I would consider. And maybe it'll come up on our rapid fire stock analysis session tonight from 6 to 7. Nod, we are right at the bottom of the hour. And you were right. That half hour just basically melted away into the past. And now we're moving on to our next big event. Folks, I want to thank you so much again for joining us and commenting and liking, and most importantly, share the video, the live broadcast. Once it comes up on YouTube, please share it with people who you feel it will benefit, especially family and friends who are in the market, who may not really understand what the risks are in trading. Just at least if you do a shout out and say, listen, you might want to watch this video, you're doing them a favor and you're doing us a very big favor. We want to thank you for that. So that is it for now. Thank you, Nan. Thank you, everyone. Remember, next week, Greg Montwell, we'll talk power pivots and we'll be talking about trading technique and risk management. Don't miss it. Have a good evening. So
Thank
long.
you.